In Chapter 2, we talked about taxes, and in this video we're going to look at how to calculate tax liability and average tax rate, and we'll also discuss marginal tax as well. So we're going to use this tax bracket for unmarried individuals, and we're going to calculate first the tax liability for $20,000, what someone who made $20,000 would have to pay, and then we're going to calculate the average tax rate. Now this does not take into consideration any types of exemptions or anything like that that would lower your tax liability, but we're just doing a straight tax liability here. So the most important thing to understand about the brackets is how much money is in those brackets. So in the first bracket, anything up to $9,525 can be taxed at 10%. Now from this bracket, the amount of money that is in this bracket is $40,125 minus the $9,525 you've already paid tax on. So there's only $30,600 in this bracket. Sorry, too many zeros there. So that's important to understand. Don't tax yourself twice, and then don't tax more than you've actually made. So for $20,000, we're going to go through the brackets and look at the first bracket. Did we make more than $9,525? And the answer is yes. So we take the $9,525 times, and that first bracket is 10%, 0.10, and that's $952 in that bracket. Now look at the next bracket. Did we make more than $40,125? No, we did not. We made 20, so that's where you stop. So if we take 20, our 20,000, and we subtract the $9,525 that we've already paid tax on, we need to pay tax on what's left, which is $10,475. So that amount of money is taxed at the 12% rate. Then we add these two together, and this is our tax liability. Now let's talk about the marginal tax rate. If we were to make $20,001, which of these brackets would that $1 fall in? We've already used all of the money in the first bracket. Did we have money left over in the second? Yes, we did. So that's where that dollar would fall, and our marginal tax rate is 12%. To get our average tax rate, we take our tax liability, $2,209.50, and divide it by our taxable income, and our average tax rate is 11.05%. All right, now we have someone who's made $125,000. So we start over and we go through the brackets just like we did at the beginning. All right, did we make more than $9,525? Yes, we did. So we're going to use all of the money in that bracket. Look at the next bracket. Did we make more than $40,125? Yes, we did. So we're going to use all of the money in this bracket. So if we take the $40,125 and we subtract $9,525, because we've already paid tax on that amount of money, the amount of money in this bracket is $30,600. So we're going to use all of the money in that bracket, and that's at 12%. Look at the next bracket. Did we make more than $85,525? Yes, we did. So we're going to use all of the money in this bracket. How much money is in this bracket? Well, we take this top number and we subtract the $40,125 that we have already paid tax on, and there is $45,400 in that bracket. So we're going to use all of that money, and that's taxed at 22%. and go to the next bracket. Did we make more than $163,300? No, we did not. And we don't want to use all of the money in the bracket because we didn't make that much money. We only made $125,000. So that's where we stop. When you get to the bracket that you don't make all of the money in that bracket, you stop at how much money you did make. Then we're going to subtract the $85,525 that we have already paid tax on, and we have $39,475 left to pay taxes on. So we multiply that by that bracket. Then we add these together, and we have $24,086.50 is our tax liability. So what is our marginal tax rate? If we made $125,001, it would fall in this bracket. So our marginal tax rate is 24%. Our average tax rate is going to be our tax liability divided by our taxable income, and our average tax rate is going to be 19.27%. All right, this person made $350,000. So we're going to walk through the brackets. We used all of the money in the first bracket. We used all of the money in the second bracket. Did we make more than $85,525? Yes, we did. So we're going to use all of the money in that bracket. Did we make more than $163,300? Yes, we did. So we subtract the $85,525 from the $163,300, and the amount of money in this bracket is $77,775, and we use all of that. And that is taxed at 24%. And then look at the next bracket. Did we make more than $207,350? Yes, we did. So we're going to use all of the money in this bracket. So if we subtract $163,300 from $207,350, the amount of money in this bracket is $44,050, and we're going to use all of that money. That's taxed at 32%. And then look at this next bracket. Did we make more than $518,400? We did not. So we stop at what we did make because we didn't use all of the money in that bracket. So we only use what money we have left. So we take how much we made, the $350,000, subtract the $207,350, and we need to still pay tax on $142,650. So that amount of money is going to be taxed at 35%. We add these numbers together, and our tax liability is $97,302. So our marginal tax rate, if we made $350,001, where would it fall? It would fall in this bracket because we still have money left in this bracket. So our marginal tax rate is $35,000, and our average tax rate is going to be our tax liability divided by our taxable income. So our average tax rate is 27.8%. And our last problem is this person made $1 million. So we're going to actually go through all of the brackets, and we're going to use all of the money in each bracket. So there's $9,525 in the first bracket. There is $30,060, $600 in the second bracket. And remember, we just subtract the small number from the large number to get how much money is in the actual bracket. We're going to use all of the money in the next bracket. So beyond this first bracket, we don't use the actual numbers in the bracket after the first 10% amount. All right, we use all of the money in the next bracket. All of the money in the 32% bracket. And then we are going to use all of the money in our 35% bracket. So we subtract the $207,350 because we've already paid tax on that amount from the $518,400, which is the max in this bracket. And that is $311,050 taxed at 35%. And then the last bracket is anything above the $518,400. So we're going to take our $1 million, subtract the $518,400 that we have already paid tax on, and we have a balance of $481,600. And we're going to use all of that, and we will pay 37% tax on that amount. So when we add all of these together, our tax liability is going to be equal to $334,434. Our marginal tax rate, of course, is going to be 37% because that's as high as it goes. Anything above what we've made is going to fall in that bracket. Our average tax rate, we're going to take our tax liability and divide it by our taxable income. And we have a 33.44% average tax rate.